May profits be upon you. Welcome to another market forecast. This is an update to my weekly market forecast that I put out. I usually put them out on Sundays. I had to put it out on Monday this last week because I ran into technical difficulties, as I already explained. Um, but I want you to see which one was it? Which one was that's the U.S. oil? That is that. There it is, right there. You'll see that in this video that I put a an update here quoting Wall Street Post biggest daily drop in 3 months. Trump Greenland tariff threats trigger wide sell off. All right. And I said, I'm going to have to reassess my analysis after this, right? After that. And what I was looking at was understand that I was bullish. All right. S&P, I had accumulation, manipulation, and distribution in action, wait for distribution. But I was basically in the video, I was waiting for a bullish breakout. That's where I was leaning. But I said, wait until the market breaks the range that it's in. Well, I also mentioned during that video that like I showed you here. Hold on. This one. All right. That the market made a higher, low, high, and we're shooting up higher, right? But we've been. I pointed out that we were moving sideways, right? This is the monthly time frame that I'm looking at, all right? And I mentioned that there's these wicks here that I find very, very interesting. I did not want to see the market when it opened up the new candle, all right, for the month, that I didn't want to see it go past the 50% of the wick of this candle. All right. I want to see it tap. If it's going to go, I want to see it go, find support in the first 25% to 50% of the range of this wick. The same way this one was respected at the 50%. We didn't go past that 50%, and it stayed up there, found support and stayed up. I want to see the same thing happen here. That's the thing I mentioned. And I also see that there was a wick here, and I drew that wick. And I said, this is the one that we want to see respected. What did the market do? Boom. Straight down on Tuesday's open. All right. You see that it had a volume imbalance. It opened with the gap for the week, a new weekly gap, a new weekly open gap. Right. And headed down. But where did it find support? At that 50% of the wick. That's where I wanted it. And I was looking for it. And I said, man, if it finds supports there, this is going to be a great place to take a loan. All right. Why? Because look at the weekly range here. Uh uh it this is the manipulation. All right. I was looking at this as manipulation. It broke up higher, right? And then it came down, swept some sell side liquidity, didn't respected this low here, this 50% of the wick, and then found some support. What could the next candle hold? Right? This is still a candle that is forming. I'm looking for it to head up to these highs. I'm looking for distribution. That's what I'm looking for. Higher. All right. Hopefully we're, you know, I was thinking that this may be the manipulation, and that we may see distribution down here, but because the market came back into this range and respected this low, it seems to be a bullish indication to me. And look how this market made up this, what do you call corrected this impulsive move down and then back up. All right. If we go to, you can see the same thing with what I showed you in the last video. You can see the same thing happening in the um, the NASDAQ, right? if we go to the monthly, you can see, look at that wick. Look at the respect given to it at the 50%. And then you see there's no close beyond the 50% of this one. Yeah, it probed down, but it stayed up in the top 25% of this wick. That is a bullish indication for me. You understand? I'm thinking that we may find the market heading up higher. All right. And if we go to the weekly, because this is a correlated asset with the S&P, you can see how the market's been moving sideways, right? And I said, wait for the AMD, wait for it to play out. This is the accumulation. Where's the manipulation at? Where is the manipulation at? Well, maybe these lows being swept here and the respect of this wick here. I'm looking for the respect of this wick, that the next candle won't open up, will open up and not close past this wick, the 50% of this wick, and continue up higher to the buy side liquidity here. All right. If we go back to the S&P, let's go down to the daily. I want to show you something very important. You see this? You see this move here? All right. That was a great impulsive move. All right. As the market is impulsing up, break this high here. All right. We'll start trading above that high. Why is that important? Because that high led to a new low. All right. And that is establishing the lows and highs of this range. For us to go to trade above it, I'm looking for this as an impulsive move to be corrected. And it was corrected down to the 618. If you put your Fibonacci retracement tool from here to here, as I showed you in the other video, you would see that it hit the fib right around the 618 and pushed up higher, and then even higher than that. All right. Now, these are internal highs and lows because this is the high, this is the low of the range. All right. Internal highs and lows. We're making higher highs and higher lows nonetheless. All right. And with the S&P, we already took the buy side liquidity, already hit a all-time high up here, right? Before this Trump news and then the plunge down. But this is what I want you to pay attention to. The market came down to the extreme of an order block here, and the order block is right here. As soon as as soon as the price had changed the state of delivery here with these two uh, bullish candles closing above this bearish one that made the new low. This is the change in the state of delivery. This is an order block, folks, right here. And the 50% of it, the consummate encroachment, if you will, was respected here. This is the extreme of that order block. All right, the extreme of the order block, the lower part concentrated and all, and the market stopped dead right there. Bam! Right? And what else is this line? What else does that line overlap? If we go back to the doggone weekly, you will see that it is the 50% of this wick. That gives us a confluence, all right? A confluence of support. Are you following me? Are you following me? You can see the same thing happening with the NASDAQ, the extreme here, all right? Down close candle that made this low here. And you can see that this was the change in the state of delivery, which is an order block, folks, right here. All right. And this is the extreme part of it. And you can see the 50%, the consummate encroachment of this order block was respected. And you see the recovery back to the opening gap. Now, why did it stop there? That's what gaps do. That's what the volume imbalances do. You see it on the S&P as well. It goes right to it, bam, and you see the reaction to it. But I don't just like I mentioned. I discussed this a little bit in the weekly video. I don't look at these as fair value gaps. I look at them as speed bumps. A lot of times you'll see the market just react to them and then fill them. All right. So not so often, not so frequently will I see a rejection from it, like a bearish fair value gap. All right. I will see a reaction. I'm expecting a reaction to it, and then the market to overcome and quite possibly head towards these descending highs here, which is a draw on liquidity. And I'm looking for that bullish move up. All right. Distribution. All right, after this accumulation, I'm looking to look at this low being taken out as some liquidity being swept up, a mitigation of of an order block, and a higher move up to sweep liquidity, possibly, which I believe is the draw. We may get a reaction here where we go where it becomes a speed bump, and then we can come up a little higher. All right, same thing with the NASDAQ. We have the order block here. It pushed up higher to the volume imbalance, the new weekly open gap. All right, and I'm looking for price to find support. You know, we found the support here, but we're gonna react and then continue up higher to these relative equal highs up here. All of these, one, two, three. I'm looking for the market to, at the very least, sweep. It doesn't have to hit on all new high. It doesn't have to, because the S&P is a little ahead of it, right? So once the S&P hits it, it doesn't make it necessary for the NASDAQ to hit it because it's the weaker one, all right? But I think the objective is to reach this liquidity point up here. I hope uh, that I didn't take you too long into this. You can see the Dow. You can see the Dow is doing the same thing. Found the respect here. Found the order block. All right, this is a larger area of fair value. All right, but this is the extreme of the order block. All right, and you see it found that support there. You see that recovery right to the gap. I'm looking at the the Dow to definitely reach all-time highs as a liquidity target. Can I get a thank you? All right, I'm looking for the Nasdaq. Come on, come on. All right, I'm looking for the Nasdaq to hit this as the liquidity target. All right, it's a got a little ways to go. We got some work to get through this. All right, that volume imbalance, but the S&P, yeah, I'm looking at the same on this one insofar as a liquidity target, a buy side liquidity target, if we can push past this volume imbalance. You have a good draw up here, these highs. It may hit this one, it may hit this one. I'm looking at all three. Doggone it. Come on, man. Get off of this. What are you doing? Oh, man. Oh, thank you. Doggone. I, I'm gonna figure it out. I'm gonna figure it out one of these days, folks. All right, so these. We got the liquidity targets up here. I'm looking for uh, the market to head up this way after a, what do you call it? A reaction to the volume imbalance. Now, I want to show you something as a bonus. We're going down to the daily. We're going down to the daily. I'm looking inside. I should have said this first. I'm looking inside this candle here for areas of support that would tell us that the market is heading towards this volume imbalance and quite possibly to the fair to uh, the drawn liquidity up here at the buy side. Okay, I'm gonna show you right there. I'm gonna show you right now. What can we see? This is it. This is the volume imbalance. This is the push down from Trump. Lower lows, lower highs, very nice structure. But you see, these highs are descending highs and they serve as liquidity points. You know, that draw price to it. And you see that the market was drawn up to those highs to sweep that liquidity, a pullback down to the change in the state of delivery down here, found support, pushed up higher. We have a fair value gap here, a fair value gap here. All right. When you see fair value gaps feeding the next one, creating and forming the next one off of an originating one. This is bias. This is the market makers buy model. Excuse me, and you can see that we're heading towards that high. It seems plain to me. We've already reacted on the 1 hour to this volume imbalance. So I'm looking for this to act as support. Same way this acted as support, price pushed above it, found the support, pushed above the new high, found support. I'm looking for price to push through. All right. Does this make sense? If you think it does, let me hear it in the comment section. Make sure you hit the like button. Make sure you hit the boost button, and do leave a comment. Leave me some feedback. Let me know how the analysis is playing out for you. I would love to get some live feedback from my viewers and especially my subscribers. And maybe you'll consider becoming a subscriber. All right. I'll see you in the next video. Thank you for watching. May profits be upon you.